Welcome to Mike Dub 27 Trader. And today we're going to be looking at this bleak market that's coming up this week. Of course, we know all the trade rumors and all of that stuff. Not even trade rumors, tariffs, and what they're doing with the stocks. But for a lot of these stocks, is actually making them very affordable, so that you can get them for the long run. And then when everything's done, you don't have to say, man, I wish I would have bought that stock back when it was affordable. You can get it now. But before we get into that, let's go ahead and start with the tip of the weekend. And that is IQIY. Once again, IQIY provides online entertainment services. It attracts a massive user base with tremendous user engagement and has developed a diversified monetization model, including membership services, online advertising services, content distribution, online games, live broadcast and IP licensing, talent agency, and online literature. Basically, this is the Netflix of China. Pretty nice size of employees. Market cap 1.55 billion. High today 166, low 157. That's why I say that this is what a short, because it's been like that for a while. Like, let's go back, and it hasn't really broken too high. You got to go back all the way to May to see it hit $2. But the thing about this thing is, it drops just as easy, right back to 153. So it's kind of been doing that for a while. So right now it's back at that low. So this is one of those. When it hits something like 157, that's when I would jump in. And then 166, 167, maybe even 165, go ahead and jump right back out. It's cheap enough to where you really only need 5 cents to and change to really make any type of decent money. See right here, it's 41.7% buy, 58.3% hold, 0% sell. So even the analysts like it. Cool thing about this is the price earnings ratio, 38.19. So it's making money. 52-week high, $4.72. 52-week low, $1.50. Even when it comes to ratings, they say the fair value is $2. So you still got a ways to go. This is definitely something to get in. Uncertainty very high. Economic moat none. Stewardship poor. I mean, it's a cheap stock, so you can't expect too much. This is, like I said, this is one of those where you would just short. You're not going to be really into it too long. They actually did a good job at its earnings call. It was estimated to be 0.03 cents. It did 0.04 cents per share. So right there, it beat earnings, and yeah, this is definitely something that you know it's tariff friendly, so you don't have to really worry about it having to have anything to do with what's going on with the news and things like that. Another stock that's in the same boat as far as being tariff friendly is Allogene Therapeutics. This thing is doing its thing. Yeah, it went down to 111, shot up to 120, and it's just been grinding for the longest. It was at 107. A month ago it was at 170, so it still has a way to go. But let's look at the news. Allergen Therapeutics operates as a clinical stage immuno-oncology company pioneering in the development and commercialization of genetically engineered allergenic T-cell therapies for the treatment of cancer. So it's a cancer medicine. Employees 229. It's in San Francisco, California. Only issue is PE ratio. The price earnings ratio is still low, which means they're still not really making any money yet. 52-week low, 0.86. I remember when it hit that. Probably should have got in there and left it, but with that, it was too much uncertainty. Market cap 255.92 million. High today 121. Low today 110. 110 seems to be the spot you kind of want to get into this right now. Just wait for it to go back up. It may drop low, but it's going to go back up because therapeutics really isn't affected too much by what's going on in the news right now. This hedge fund sentiment about Allo was negative. Overall ownership decreased by 36.9K shares versus Q4. This is not investment advice, which is fine. Make it cheap. It's going to go right back up. That's why it's an 86%, 85.7% buy and a 14.3% hold and zero sell. Because the analysts know. So yeah, it's definitely one of those that I'm definitely going to be watching as well. Now, the third one probably be Lucid Group. But this would definitely be like one of those where it's like you have to go along with it. Because Lucid Group is at 224 and with the tariffs and everything, it's probably still going to drop a little bit more. But they're saying that it's going to drop no less than 190 before it starts shooting back up. And when we say shooting back up, you take the tariffs away or the tariff issues away, that thing is at $2.99. Highest it's ever been, $55.21. So that's what we're shooting for. We want to see this company make its way back up. 6,800 employees, Newark, California. Of course, we know about the business deals they're doing with the Saudis. P ratio is still negative 1.83. Market cap went down 6.79 billion. 52-week low 193. 52-week high $4.43. Low today 221. High today 243. This is one of those you got to catch it when it spikes up because it's going to go down lower. And you just got to play it like that. It says right here for the Motley Fool, could buying Lucid Group stock today set you up for life? And he talks about how regardless of the status of the electric vehicle, the player Lucid Group is still just a car stock, and car stocks do not make investors fortunes. So it's one of those where, let's see what it's saying. All right. And it says right here, Lucid's, we've already gone over that. Competition is one of the things that are keeping EV makers like Lucid from rocketing shareholders to incredible wealth. In addition to Tesla, traditional automakers like General Motors and Ford also make electric vehicles, which from personal experience, I can say are quite nice. The pure EV players don't have any sort of monopoly on that space of the business, and it seems very unlikely that the more established players within the autos and are going to let up the pressure. And this is why Lucid Group is one of those where you just got to day trade it because it's always going to be little brother to Tesla and little brother a lot. Now, the interesting thing I always wondered about Lucid Group is it doesn't have to be Tesla, but why can't it be Rivian? Mr. 1444. And when you look at the information right here, Market cap totally different. $16.68 billion in market cap. It's still working on a low PE ratio of negative 3.90. But when it comes to the information, they don't get shorted out as much as Lucid. See right here, 52-week low is 9.50. 52-week high, $18.86. Irvine, California. So whoever's behind the business, with Lucid needs to go ahead and take some notes from Rivian. Now, as far as Rivian's movement, really doesn't do too much. It's like a 10-cent thing, but it's like $14. So there's not really too much going on there. And it's dropping as well. It may not hurt to see where this drops. I may go ahead and put this on a watch list. Seeing how it does do better than Lucid. I never really thought of trading it, but we can see. Get this at a real low. Let's see. 1270. So it may not be a bad deal just because they don't get shorted like Lucid. They set this alert for, I already got it there. Now that's above. Let's go ahead and set this alert for, let's just say 13. Even. Alright, we'll see what Rivian does. Otherwise, everything else is just terrible. So that's where it's at. And we're going to see what happened this week. So don't forget to like, don't forget to follow. This is Mike Dub 27 Day Trader. And I'm out. Deuces.